Welcome back to the Home Path Podcast. This is Raphael, and we're going to be talking about the interest rate illusion, why 8% might be the best rate you'll ever get. Now, while that may sound a little outrageous, I want to tell you that everybody's waiting for rates to drop before buying a home. But what if I told you that 8% might actually be the blessing in disguise? So today we're going to break this down and why waiting could cost you thousands of dollars, and why you should buy right now, and it could be the smartest move. So listen to me. Welcome back to the podcast. I'm Raphael, and today we're going to challenge the biggest myth in real estate right now, waiting for lower interest rates. You'll learn today that rates might be better than getting them ultra low because you can always refinance. But how to outsmart the market. Because if you're trying to be outsmart the market, this is the episode you want to listen to, because you should make moves now instead of later. And we're going to go through that today. So we're going to talk about the low interest rates and what caused the higher volume in prices, and then how to use those rates to buy down to your advantage, and then the hidden benefits of buying in a high rate market. So low interest rates made homes more expensive. If you've gone through the pandemic, you witnessed this. They're called pandemic rates, right? They're like in the 1s, 2s, or 3s. But what happened is that it created a buying frenzy. So we all know that interest rates were low. But there's a dark truth to it. When rates drop, home prices skyrocketed. And I know a lot of you are benefiting from it because you have $100,000, $200,000 in equity that you built over the pandemic. You bought a home right at the start when rates were low, but what happened is that there was more buyers that entered the market, which equaled bidding wars. A lot of you got into this bidding war trap where you were paying $20,000, $30,000, $40,000, $50,000 over what the home was worth, and homes were sold for way more than asking price. I even asked myself, where are so many people getting all this money when we're in the middle of a pandemic? It was insane. It was like Lambos couldn't stay on the lot. People just had money out of nowhere. So many buyers overpaid and just to lock in a low interest rate. But what happens when that rate drops again? The demand's going to surge. So a lot of people are waiting for rates to drop. Well, guess what? Everybody and their mom's going to start applying to buy a home because there's a trigger word in the news that the rates have dropped. It happens all the time. So competition is going to increase and home prices are going to jump again. So if you think the home prices are expensive again and you're just hoping for the rates to drop, guess what's going to happen? There's going to be more competition. So you can end up paying way more for a home just trying to wait for a lower rate. So either you can't refinance the actual price of the home if you overpay for it. So the only thing that's going to happen is just going to drive up the price of the home. So how do you win at this high rate market? Well, now that you know the truth, let's talk about how to turn today's market into an advantage for you. So right now you have less competition, so you have a little bit of more of negotiation power. When you don't have negotiation power is when the demand goes up. So usually, depending on when you're listening to this, right around like May 15 and on, when people start getting off of school, what happens, summer starts and then families want to move. So usually when the kids get out of school, that's when families want to make the move to, switch around. So that's really when it starts getting busy. And then all the way up to August, September, when the kids go back to school, is because families don't want to move in the middle of the school year. So that's kind of when it slows down. But you can negotiate price reductions, closing costs, and even seller pay buy downs. So you could say, hey, seller, I would really like to buy. It's a really tough market, but I don't really need help with closing costs, but I could help, or if you could help with some seller concessions so you can buy down my rate, and that could be something you could do. You could buy down the rate by just getting the seller to pay the interest down for the next 1 to 3 years, just to give yourself a little bit of breathing room until we wait to see what happens with the market. There's also permanent buy downs where you could use all of the money that the seller gives you to just lock in a lower rate. And you can lock it in for the life of the loan, because let's just say it takes a little bit longer. You don't want it to increase from 1 to 3 years. Now, it's not a balloon loan like the ones in 2008, it just means that your loan's going to be fixed from, year 3 to year 30, but the first 3 years are going to, just be lower, and then it'll lock in after that third year. So the strategy here is to buy a home at a lower home price, and then you can refinance when you can. And the takeaway of this is just waiting for lower interest rates are going to cost you more in the long run. Here's why. Because if you look at smart buyers, they're taking advantage of today's market conditions. They're negotiating better deals. So just because you're focused on the wrong thing, if you're just looking at the rate and you're all fixated on that, guess what? Sellers are getting desperate and they know the market's tough. So this is your time to start negotiating on different things with the property, because right now they're willing to play ball. Later on, they won't. They're going to tell you to go kick rocks. So if you want to know your options, just reach out to us. Go on the website, californiahomepath.com, fill out a form on the contact us, and we'll see, if right now it's a good decision. Because before you go out and get, go look at homes, the first thing that I would recommend is, why don't you start looking at your finances, seeing if you can file your taxes, anything right now to boost your credit score, to get yourself ready. So you will have a little bit more negotiation power because your score is a little bit higher, and you're going to be ready to buy before it gets busy. So if you are waiting and you're trying to time the market, look at how much money you can save right now, because you can always throw off the interest calculator by being a payment and a half in advance. Meaning, if you do your taxes and you make an extra payment and a half and you're always in advance, what you're doing is you're offsetting that payment calculator. So really, you don't have that interest rate that you have, like a 7% or a 6%. You can offset that interest rate by just being a payment and a half in advance. There's so many different strategies that you can execute at the beginning of the loan than trying to wait for the rates to go down. And if you think the values are going to go down, well, what's going to happen is just going to be a buying frenzy. Inventory is kind of really low right now, and some people are still holding off. And then some people are just getting themselves in because they know that once they lock themselves in, that they're done. They don't have to, compete with anybody. They don't have to wait for the rates to drop, because at the end of the day, when I hear this buzzword of waiting for the rates to drop, it's hilarious to me, because most people don't know the difference. If by the time they're ready to buy, if they're going to say, okay, rates drop, so maybe it was a 7.25 and now it's a 6.99. Well, you don't even know the payment on a quarter and the longevity of it. How much is it going to impact you? So you don't know if you're trying to save, $100 a month on your payment, but you're overpaying your home by $30,000, or now it went up in value. So a lot of times you don't know that. It's just some made up thing that you're doing in your mind, because there is a cost of waiting. And it's like anything. So let's say cryptocurrency, Bitcoin. Will you ever get it at $500 again? Probably not. Sure. Will it go down below 100? Yes, but not to like $500, right? Same thing is like, you can't go back to the 70s and buy a house for $25,000. It's just not going to happen, right? It may fluctuate. And a lot of times you may see why it fluctuates. I'll tell you why. It's because a lot of people got greedy, whether it was a real estate agent that didn't tell the truth to the client, or the client just had big old eyes from Zillow estimates and they believed that their house should have been worth, $1 million. And then now, because they overpriced their home when they got listed, there's not a lot of activity because interest rates are really high. So now they're doing price reductions. So now when people call me and they're like, well, I just saw the property down the street, they brought it down $20,000. I think houses are going to start coming down now. No, that they started overpricing the homes from the beginning. So logically, the market does not demand that. So they have to bring down the prices to be a little bit more realistic. And to you may think that prices are quote unquote coming down, but all it is that they overlisted the property. So you got to know the difference between the two to be able to make that that suggestion. So I hope that was helpful, and we'll catch you on the next episode.